Welcome, friends. Welcome to my channel, EduTech Law. Please subscribe to the channel. Today, we'll be going through the provisions of reversal of input tax credit in GST law. What are the prerequisites for claiming input tax credit? That is, the requirements of section 16 has to be fulfilled, which are the recipient should be in the possession of document, that is invoice, proper invoice should be available. He must have received the goods and services. Tax has been paid to the government by the supplier, and return has been filed on time by the recipient, provided the payment also has been made to the supplier by the recipient within 180 days from the date of invoice. If the payment is not made, then that ITC will be reversed and an interest of 18% will be charged on that from the date of credit till the date of reversal. This ITC can again be claimed on payment of the above invoice to the supplier. A recent amendment has come that if the recipient does not make the payment in full but proportionately, then he can claim ITC also proportionately during on or before 30th November following the relevant financial year, or furnishing of annual return, whichever is earlier. So government has given a chance and has extended from September to November 30th for again claiming the ITC, which was reversed for non-payment of invoice amount to the supplier. This restriction will not be applicable on supplies between distinct person having the same PAN. That is, if one PAN has distinct registration in different states, so the payment within 180 days may not be applicable because it is under one PAN, that is, it belongs to one single person. ITC not allowed. Where ITC is not allowed, that is, the areas where the ITC is not allowed are supplies received exclusively for other than business purpose. ITC can be claimed only if the supply is for business purpose. If it is for other than business purpose, then ITC cannot be claimed. Inward supplies used for non-business purpose. Though the supply, while making the supply, it was for business purpose, but during the usage, it is used for non-business purpose, then credit will not be allowed to that extent. Where the supply is received exclusively for the exempted supply, affecting the exempted supply, like for supply of exempted goods, or if the supply is exempted, then ITC cannot be claimed for such thing. Inward supplies used partly for affecting exempt supplies, and then credit shall be restricted to that extent. If it is partly affecting the exempt supply, then proportionately credit will be not allowed and the other can be taken. For banking and NBFCs engaged in the supply of services by way of accepting deposit, extending loans, shall have the option to reverse credit at flat 50% instead of reversal on proportionate basis. Like, they need not do the proportionate calculation, instead they can take a flat 50% reverse and claim the 50%. How to reverse ITC as per rules 42 of CGST rules 2017. So how we can reverse ITC? In actual, that is explained to you with the help of a table. So, like for example, if we have total input tax credit, that is 1 lakh. So, in that, we have to reduce supply exclusively for used for other than business purpose. Like we have said before, if it's not for business purpose, then the ITC cannot be claimed. That has to be reduced. And supply exclusively affecting the exempted supply, that is also not taken as input tax credit. So that has to be reduced. And block credit. Block credit is the category of credits which cannot be taken for claiming input tax credit, that will be going through in the further slides. So that block credit also has to be reduced. So balance credit is 80,000, and that what has been actually used for taxable supplies, that will have to reduce. That is 60,000. If it is 60,000, then we'll have to reduce that. Common credit. So balance is 20,000. Then in that, again credit attributable to exempt supplies. So exempt supplies ka there's a formula, like aggregate value of exempt supplies by total turnover into 10%. So 10% of the aggregate value of exempt supplies calculated divided by the total turnover, that is also to be removed. And ad hoc reversal. Ad hoc reversal is again 5% of the credit attributable to the exempt supply. So that those two categories also have to be removed, and the remaining we can take it for the input tax credit eligibility to be claimed. Reversal of proportionate credit. This is pertinent to the note that reversal has to be done in each tax period. The reversal of ITC has to be compared with the financial final calculation to be done at the end of relevant financial year. So in GST, this is a benefit actually what government has given. So the comparison has to be made, and following the now financial year till 30th November, we have the time to check our input tax credit reversal and claiming, and then we can take the actual tax eligible tax credit ITC. Any short reversal will be subject to 18% interest per annum. Block credit. Now we'll see the provisions of the block credit under section 17(5). These are the credits, like on the purchase, the ITC is not allowed and it is blocked on the initial stage. Like purchase of motor vehicle. If any business has purchased motor vehicle, then ITC on the capital asset will not be allowed. If that business is into the supply of cab rent services or in transportation, then they can take the input tax credit, because that will be the goods, that will be their inventory for that business. But for the other businesses, purchase of motor vehicle, which is an asset, is not allowed. Repair and maintenance of motor vehicle, the ITC on this is also not allowed, it's blocked. Insurance of motor vehicle, food and beverages, outdoor catering, beauty treatment, health, cosmetic, all these services, if any ITC, any GST is paid or on this, it cannot be taken as input tax credit. On membership of a club, health and fitness center, on rent a cab, life insurance and health insurance, on travel benefit extended to employees on vacation. Also on works contract services where supplied for construction of immovable property, which is to be capitalized. So here also it is resulting into a capital asset for which it is not allowed ITC. On goods and services received for construction of an immovable property on own account. This is a personal account for their own personal account. So for this also, ITC cannot be claimed at the business purpose on goods or services or both used for personal consumption. When goods are used for personal consumption, ITC cannot be claimed in the business. And one major thing is like on goods lost, stolen, or destroyed. If any goods are lost, stolen, or destroyed, then ITC cannot be claimed on such goods. And also, if goods are disposed by way of gift and free samples, though for the purpose of business, but we cannot use it in the ITC eligibility. So, these are the areas where we cannot, where the input tax credit is blocked and we cannot take it for the calculation of the eligible input tax credit. Thank you. Subscribe, like, or comment. And if any query is there, do please comment so that we can reply and also make more such videos for your reference. Thank you.